mute your this thing, eh? So if you mute your this thing, Winner, mute your microphone.
Okay, sir.
So okay, next time, just an important one. Next time, if you want to refer to your teacher, you refer to your teacher as sir. It mustn't be me, anybody else. It's just good you accord respect to whoever is training you or whoever. I know you didn't mean it, or it didn't occur to you, but just next time, we continue. So what was I saying? I said resistance is an area. So you can see, look at it now, because now analysis una don dey do like this. So are you seeing how from this left part, you see it got to this point, what happened? Boom. At the center, it got to that point, boom. So for example, what I did today, the trade I entered today, I already know that resistance of the market is 23.4. I saw price going up, saw price going up. I just waited for price to get there. Set my buy order for 23.4. That's I wanted to short. Set it for 23.4. And what happened? As price got to 23.4, he picked it, started coming down. He picked it, started coming down. So the area between 23.4 and 23.5 is the area of resistance. Support is the opposite of resistance. Support is the area in which price starts going down. When price is going down, it cannot break beyond that area. It will bounce back and start going up. So as you can see here, for example, our present market support is the area around 22.6 and 22.657 and 22.63. So that is our area of support. So as I am in this market now, I'm watching price. If it starts getting to 22.6, I will take my profit from the market because price might even break below it. I don't know if I'm making sense.
Can you repeat, please, sir? I didn't get to the support.
Support is the level in which price gets to when declining. If it gets there, it bounces off. Or if it breaks beyond that level, it will start going down. Remember, for resistance, if price starts moving up and gets to that level, if it bounces there, it will bounce back. If it breaks beyond that level, it will start going up. That is resistance. Support is the exact opposite of it. So to know resistance, you look at the previous market. What I did now, you see that I zoomed into my screen and checked where the previous resistance was before. That would give me the likely area of present resistance, which I had showed you people. The two previous resistances, 23.4. So if, for example, this price now at this point, if, for example, this price breaks beyond 23.4 here, 23.4 ceases and starts going up, 23.4 ceases to be support. 23.4 will now become a new resistance. So you said?
It goes up.
Yes, if it breaks, it starts going up. If it goes up and doesn't come down, that previous support becomes a new previous resistance becomes a new support. So where you will now have as your new resistance is where the price will get to and start coming down. Do you understand?
Yes, sir, I get that.
Great. Also, you now zoom into the chart, look at like backward. Say, let me give you an example. If price breaks below 23.4 now, say next time when market is going up, price breaks below 23.4, our next support is going to be 24.1 area, this area here, 24.1. After 24.1, 24.7, that's going to be our next support. Our next resistance, sorry. Our next resistance. And as you can see, okay, look at this point. Are you seeing that price got here at this point? Got here at this point. It could not break beyond this point. It came down, no, did again. See this point here. No, here. You see here? See, I came down small. Did again, tried to break, could not break it. Boom. It still came down. Did again, tried to break it. Could not break it. It still came up then before it started falling down. Are you seeing it?
No, sir, we cannot see your screen, sir.
But I just showed you now. Look at, you can't see my screen.
No, we are seeing the screen. The screen is showing.
So did you see this last illustration that I did?
Yes.
Look at from here now.
We saw it.
I said,
I guess it's from my end.
okay. I said that if price, say when price breaks now, gets to support, and bounces now and starts going up. If it breaks this resistance of 23.4 and starts going, I say where we'll be looking at as our next resistance is 24.1, because that was where price got to before and started coming down. Do you understand?
Okay, is the market now going backward? Please, is it not supposed to be? Okay.
I said that if price breaks 23.4, you know that it has broken now and start going up. So market would always look for a new resistance, and to look for where market will put its new resistance, you check previous performance of the market on wherever market had gotten to before. Previous performance is what has happened in the past.
Okay.
Yes, of where market had gotten to before, that it could not break beyond. That is above that 23.4 now. And the only point there is 24.1.
Okay.
So that will be your new
The new
resistance.
Okay.
Exactly. But look at, it's a temporary resistance, because you see, not much happened here. It's only 2 times that the price attempted to break off there. So you would also look beyond that 24.1 and that where the price get to before now in the course of market that it could not break beyond. It is 24.7. So you know that if price now breaks 23.4 here, say I'm talking of the next time or when price is going up, that the new resistance you should be looking out for is 24.1. 24.1.
Yes.
But however, it is a temporary resistance. It is not strong. So the main one is what?
24.7.
24.7. I'm gonna clap for myself. Let me try.
Thank you, sir.
So yeah, so that is it with resistance and support. And resistance and support are critical areas of the market. Now look at what I told you earlier. Did you see that the resistance in this present chart is 24.5? That's this one showing on my screen.
Yes.
Remember, I told you that resistance is an area. If you marry 24.5 and 24.7, you see that it's not much, right?
Yeah.
Is an area, it's not a line. Later, in the course of the training, I will teach you people how to draw on your chart, draw lines on your chart that will show you how you draw on your chart to mark resistance, to mark support, etc. I will show you people. We'll show you in the course of the training. So that's how. So now, see something to note about resistance and support. Resistance and support, they are called critical areas of the market or key areas of the market. They are called critical areas of the market, or they are areas you watch out for. If you want to buy into a market or if you want to trade a market, you buy support and sell at resistance, and vice versa. So if you are buying upward, you buy at support, sell at resistance. If you are trading to come down, you short at resistance and take your profit at support. So for example, if I'm taking my profit now, I'm not looking at taking my profit. For example, our support is, these trades are entered, our support is at 22.6. But I will not even have to wait for 22.6 because there's a temporary resistance somewhere around this axis here, 22.8. So I will first take my profit at 22.8. Now, to correlate what I told you and what we learned, do you remember that we said that the lower band of the Bollinger correlates with support areas?
Correlates?
With I was teaching, I said that the lower band gives you area of support and upper band gives you area of resistance.
Yes.
Okay.
Mhm. Now, I then said that if I'm taking my profit from here, that I would look at taking my profit from 22.8 because there's a temporary resistance here. As I click to check 22.8, are you announced? Oh, this thing has to leave. If you check on your chart, if you check 22.8, you see.
Okay.
So, I could see my screen.
No.
No.
Okay, look at that trade I entered. Let me show you the trade. Are you seeing the trade?
Yeah.
Oh,
Now you see them.
that's
Wow,
gonna be
wonderful.
10% of $1 million is how much?
100,000.
100K.
100K.
So if I enter that trade 1 million like this, now I don't secure like 100K.
That's the salary.
It is sweet, bar.
The switch
Makes
to
sense.
You know.
Whatever I'm teaching you people, you know, pass with I use enter this trade. You know, pass. I showed you people now after all, and it is from the Bitcoin market we are doing our analysis. So remember what I told you people that by 1 a.m. the trade will be a massive profit. Now remember?
Yes,
Yes.
it is.
Great. So let's go on.
How did you know
So
that by 1 a.m. the trade will be a massive profit? Sorry, sir.
okay, because the market will keep dropping now.
Wow.
The market will keep dropping. Yeah. Let me tell you what it's doing. Look at what is on my screen now. What this market is doing is that it is creating a supply zone at this area you're seeing. This thing that is looking like clusters of candle is creating a supply zone. And after it creates this supply zone, what happens? The market crashes. And I am using hourly. I'm actually trading on 15 minutes, but if I use it on hourly time frame, look at it on hourly time frame. Once we get to a certain point, boom, market will crash. So now let me teach you a pattern of trade, which is just because I don't have strength. If I wanted to do now, I will secure my profit. That profit I showed you now. I will secure that profit. Wait for the market to go up again. Enter. Look at now, the profit would have reduced. Look at. Are you seeing it?
Yes.
Yes, sir.
So if I wanted, I would have secured that profit. Close the trade, secure the profit. Because I know the market will still go up again. As the market go up, I'll enter again to short the trade down. That's how you make money.
How does that work, sir?
Is there anybody that understood what I was saying?
No, sir.
It's about the
I
taking
Yes,
of
don't
profit. I
understand.
know. Sorry, sir.
yes, sir.
See what I was saying, eh?
I don't understand that part, sir.
See what I was saying. You know, when I showed you, this thing was like 6% and 4%.
Yeah.
Yes.
I said that I would have secured that profit if I wanted. Now, I told you something that market does not just move down. Market move down,
Zigzag.
zigzag manner, down, up, but to be going down. So I've secured the profit while the market is down here. I know that the market will still go up, knowing that it's moving in a zigzag manner to go up to come down. So as I wait for it to go up, I will now enter the trade again, knowing that it will come down. So as it comes down, I will secure again. I can still wait for it to go up, enter the trade again. As it comes down, I secure my profit again.
Please, sir. Sorry. How do you secure profit?
You close your trade now.
Okay, if you close the trade, you now wait again till it come down before you enter another one.
I'll wait again till it comes up. The kind of trade I enter.
Okay. You go when it goes up. When it
Mhm.
goes up, so you're doing like opposite, right?
When
It's
it goes
coming
up,
down, you take the trade. It goes up, you take the profit. Sorry. Take profit when it
exactly.
goes up. When it's coming down, it's going short, you take the profit too. Right?
When it's coming down, I will take the profit. I will enter the trade when it goes up. It comes
Okay.
down, I take the
You
profit.
take your profit.
And that is because I shorted the market. Let me use this opportunity to teach you people what short and long is in trading.
Okay.
Yes, sir.
If you are shorting a market, it means that you've done your analysis and you are saying that this market that is already up will soon start falling. So I will enter here and take profit when the market is down. That is what it means to short. So long means this market that is already, that you have seen that the market will want to go up long. So I will enter the trade while the market is down and take profit while the market is up. That's what it means to long.
Okay.
Do you understand? So on this particular trade, I have seen that the market is up and it is going to come down. So I will enter from up, take profit while it is down. That is what it means to short. So I shorted the market. Hello?
Yes, we are understanding.
Are you understand? Wow! I see.
So you just click on close position and you close the trade if you want to
Click on
take
close
profit.
position or close all. You close all one. Now let me show you people what I was saying. Now, do you see that time I was in 10% profit? So if I closed that 10, entered while it was up, remember I am shorting the market. And I said to short means you are saying why the market is up, knowing that it will come down, you take profit while it's down. Do you see that if I close that 10%, entered while the market went up now, and wait for it to come down, you see that I would have been in 18% profit?
Wow.
Yeah.
Wow.
Yeah.
Just like that. It's not
Just
even
like
up
that.
to 20 minutes.
It's not up to 15 minutes.
Oh. Okay.
Yes. So, come in, let me check something. Wait this market to fall, eh? Now, if you ask me, how do I know the market to fall? Remember I told you that market moves from this thing. Market always moves from resistance to support. You
Yes.
remember, right?
Sir.
So, and you see that it's from resistance now, it is coming down. And if you look at this candle now, if you look at this price now, look at this price now, you will see that there is nothing between where the price currently is and the previous support, which is 22.8. So it must come down to this point. Hello?
Yes, sorry, there is one. Okay, this thing you said now. There's question. Oh, this profits. There's question I wanted to ask, but when you are done checking your trade, you can just go back there. There's one question I wanted to ask you.
Okay. Market to be bloody this night, though. Now, as part of risk management, you know what I would do? Now that I have double confirmed that the market is going to go in my direction, you know what I would do? When I close this trading profit now, to enter again, I will then increase my trading position and increase my leverage. You know why? I am settled now. I've also double confirmed that the market is going to go in my direction.
They are going fully.
I don't even know if I'm making any sense.
Yes, we are understanding you, sir. Please, did you hear what I said about after you're done checking the trade? There's something you wanted to show us about the candle, and there's one question I really wanted to ask you there.
Okay, please ask your question. Yeah, this is the candle. Ask your question.
So you pointed that red and said the market must come down. My question now is like, is there no way that the market will, after coming down a little while, it will now spark up even before hitting the support? Or is it it must hit that support before it start going up again?
No, it's not a must. It must hit support before going up. When I said it must come down as per, it must get to support. I'm speaking generally. But in the course of this, remember I said trading has to do with timing. If you look at, I've been following it on 15 minutes time frame. So there is 1 hour time frame. This is 4 hours. This is 1 hour. There's 1 hour time frame, right? Now, inside 15 minutes, this is what will happen. It's showing clearly that this market must fall. You can see RSI is already 30, 34. It will start coming down. Oh. Okay, look at now. You see that my profit has increased. Look at it. Are you seeing it falling? It has fallen. Let me show you my profit. See my profit. Profit will soon increase. This thing is slow. The meter is slow. It's supposed to. Let me refresh. Binance does this sometimes. Meter will soon start reading. So now, the only thing that can jack this price, the only thing that can jack this price up is a fundamental news. That's the only thing that can jack this price up. Yeah.
BTC.
Yes. But it doesn't mean that in the course of this trade, price will not move in small zigzag manner that will see the thing go up small, that will see the price go up small. Do you understand? But I'm speaking generally, price must come down to hit support. Do you understand? So if you don't want to stress yourself and be taking profit, you just leave it, leave your trade, come down, hit support, take your profit and support.
So can you also automate it where you can just go and sleep and it takes the profit?
Yes. No, you look at my screen. This SMTP/SL here.
Yes, profit and loss.
Great. It means take profit and stop loss. So take profit is telling the market where to take profit for you. SL is stop loss. Stop loss means if market goes against me, let me be logged out of the trade when it gets to this point. Because if market goes against you, you will be running in a loss. So you are telling the market,
Okay,
you're telling,
sir, I maybe you will still teach us how to, like, when you are talking about stop loss, take profits. How do you know the
will,
actual number? Or you still teach us that one?
and now you will take your profit at, if you're shorting, you will take your profit as support now.
Okay. Okay,
And
once you bring your cursor to
I
that support, it will show you the price.
it will show you the price. So when you're now entering the trade, you now put your take profit here at support.
Okay.
And your stop loss, you can enter two types of stop loss. You can tell the market that, say for example, I entered this trade at 22.957. You can tell the market, if this thing reverses and it gets to 22.960 or 22.980, stop loss. Remember, you entered at 22.957, right?
Mhm.
And we are shorting. Remember the definition of short?
Yes.
Yes. Means that you are predicting that the price will come down.
It will come down. So you enter and take profit downward. Great. So if price now goes against you, you're shorting. So you can tell the market, if price goes against me, don't let it get too far before you stop
Go
the
out from the
loss.
trade. Yeah.
Go out from the trade. Great. You can also, in a way, put your stop loss far. I can put my stop loss to 23,800. It's very far from here. Look at this current price. Look at now, this current price, right?
Mm-hmm.
Yeah.
This current price now,
Yes.
22.9. And I can tell the market to put my stop loss here, say 23,200. So if trade go against me, I can tell the market, okay, you know what, stop my loss here. Meaning that somehow I expect that maybe as it is going against me, before it get to that point, it will reverse and start coming downward. Do you understand?
Okay.
Yeah. So that is that. So we've
Question, sir.
covered. Okay, go on.
You said if you wanted to save your profit, you can take it out and jump in again. So I'm trying to ask, can you make more than one entry with one pair?
No.
Okay. Thank you.
When I said I can jump in again, it is this particular trade, I close it, I've taken that profit. I wait for the market
Okay.
to go up, I enter again. Not that I will still enter the same, no. You must close the one you entered and wait for it. That pattern of trading is called scalping.
Okay.
Did you see what I typed on the VVIP group? I typed something on the VVIP group while we're in this trade. I told them that I'm looking forward to
Excuse me,
scalp.
scalping as in forex trading.
Yeah,
Okay.
scalp in trade is the same thing everywhere. So that is that for tonight class. Now let me end something I just remembered, which people have to know. For another thing about Bollinger, anytime price is coming down and it breaks below the second Bollinger band,
Yeah.
it breaks and closes below the second Bollinger band. If it breaks this Bollinger band and the candlestick closes, the next one forms below it and it closes, know that the market must come down. Must come down to regions of the third Bollinger band or regions of support.
No, please come again, sir.
Anytime price is coming from up,
Yes.
it breaks below the second Bollinger band.
That is the one at the middle.
Yes, the middle. If it closes, the next one forms and closes below this. That's this candle here. This second one. This second one. This one closes below this second Bollinger Band. Remember, I told you every candle has opening, high, low, and close. I discussed that with you people, right?
Yes.
Opening means where the candle open, 22,900. High means the highest point it got to. Remember, I said that each candle, each time frame, each candle represents what is happening in a particular time frame.
Yeah,
Did I not say it in this class?
you did.
Okay, great. So each has is, for this one now, you can see the open. It opened at 23,200, high 23,006, low 22,973. Close to show you where the candle closed, where that 15 minutes candle before the next 15 minutes form. So if the second candle coming from up breaks below the second Bollinger Band, that market must come down to regions of the third band or regions of support.
The third band is also called support, right?
No, the third band is not called support. I said that the third band is plotted to support. Most times it gives you a range for your support. It is not called support. The third band is the third band.
Okay.
Oh yeah, I believe there's no more question now.
I have just one. So if
Okay, please ask.
if we're doing, let's say, what's the best? Is it 15 minutes, 1 hour, 4 hours?
You say what?
I mean for timing, like let's say you're doing analysis. Is it perfect to use 15 minutes or 4 hours or 1 hour?
You can use any time frame to do your analysis. Now let me explain something about timing. 4 hours means what will happen in the long run. 15 minutes is show you what will happen in the short.
Okay, sir.
Do you understand? 4
Yes.
hours, it gives you a broader picture. Do you understand?
Yes, sir.
So,
But the smaller time frame, 15, 30 minutes, shows you what will happen immediate. So you can use the broader picture analysis first, maybe on the broader picture to say, okay, today will be very bearish. But when you now do your analysis on your shorter time frame, for example, if I want to take profit, saying I don't want to waste time in the market, I enter now, 15 minutes, 1 hour, cumulative of 15 minutes is 1 hour, isn't it?
Yes, sir.
So if I don't want to waste time in the market, it's okay, in the next 1 hour, 2 hours, using 15 minutes, this is what will happen. You take your trade based on that. But for the bigger time frame gives you like a big, let's go here. Look at this 15 minutes now, isn't it?
Yes.
Yes, sir.
So how they talk now, don't lose profit. You see the market don't they go up. Don't lose profit, so how they talk with you now. More people are fitting into my time. See, I lost that 10% now.
Sorry, sir, but I thought you could easily close it now. Sure, when you just click on close all, you will close it and the profit will return
I
to your
didn't
wallet.
close it. I was talking. I was talking. I didn't close it.
Okay.
But still come down. Oh God, I don't like this. So look at 4 hours now. Look at 4 hours. 4 hours is showing me that the market is consolidating and it will drop to still fall that drop. So between now and the next, even between now and 6 a.m. tomorrow, market will come down. That's what it's showing me. So look at 1 day. Look at 1 day. Now, Look at one day, see what happened in one day. Price got to the upper part of the Bollinger Band and started coming down. You seen it?
Yes,
Yeah.
sir.
I remember something I wanted to tell you about. Now, another thing about price, movement of price is called price action. In trading, movement of price is called price action. Now, anytime you see that the candlestick is following the upper Bollinger Band, it means that the price action is strong. That the bullish momentum is strong. You just see price following the upper band, or your candle is just on the upper band, it means the bullish momentum at that point is strong. Vice versa, anytime you see the candle on the lower band, it means the bearish momentum is strong. Is that clear?
Yes, sir.
All right. So I think we call it a day here. Call it a day here. And we'll continue tomorrow. So I will drop notes. I will drop notes on candlestick analysis. And I'll drop assignment for you people. Well, I expect people to attempt it. And I expect people to attempt it. And we'll see how that goes tomorrow.
All right. Thank you very much, sir.
All right.
I really learned a
All
lot
right, guys.
today.
All right, guys. Good night.
Thank you, sir.
Good night.
Good night, everyone. Good night, sir.